The real estate market in Vancouver, British Columbia, has been nothing short of a financial juggernaut over the past decade, consistently ranking among the most expensive housing markets in the world. However, a new crisis is looming, one that no one expected and which could very well redefine the future of Vancouver's real estate landscape. Insurance rates have skyrocketed by an unprecedented 400%, making Vancouver condos uninsurable for many property owners. This is not a minor bump in the road. It's a disaster unfolding in real time, one that threatens to shake the very foundations of the market. As insurance companies pull out and property values begin to plummet, the consequences of this crisis are far-reaching, and the risk of a market collapse looms larger with every passing day. The insurance spike, which has caught condo owners, developers, and real estate investors off guard, represents a seismic shift in Vancouver's market dynamics. For many Vancouver condo owners, the financial burden of these sky-high premiums has become an overwhelming weight. What was once an affordable cost of insuring their properties is now far beyond reach, and some owners are finding themselves in a situation where their homes are uninsurable altogether. That's right. What does it mean when you can't even insure your property? It means that, effectively, the property is worth less than it was before, and not just in market terms, but in terms of its financial security. This unprecedented rise in insurance rates has its roots in several factors, both local and global, converging to create a perfect storm. Vancouver's real estate market has always been fragile, with affordability being a pressing issue for decades. But the rapid escalation in insurance costs isn't merely a symptom of this long-standing problem. It's a catalyst that is exacerbating an already fragile market. Insurance companies, which had once seen Vancouver's real estate market as a lucrative opportunity, are now pulling back in droves, unwilling to cover the increasing risks posed by natural disasters, fire hazards, and rising construction costs. These factors have all come together to create an environment where condo insurance premiums have risen to unsustainable levels. In fact, for many condo owners, these insurance premiums are now higher than their property taxes, an unimaginable scenario just a few years ago. According to the Canada Mortgage and Housing Corporation, CMHC, the increase in insurance rates is not just a reflection of the rising costs of construction materials or the heightened risk of climate-related disasters. It's also a sign that the market itself is becoming more unpredictable. In their latest report, CMHC noted that insurance companies are reevaluating the risk profiles of properties in Vancouver, and many have deemed the condos in the city far too risky to insure. With natural disasters like flooding, wildfires, and severe storms becoming more frequent and intense, the risk profile of Vancouver real estate has shifted dramatically. The insurance market, once a reliable safeguard for homeowners, is now in turmoil, and no one seems to know how to stop the inevitable fallout. The ripple effects of this crisis are already being felt across Vancouver's real estate market. Property values, already high, are beginning to show signs of decline. What happens when a city that was once a magnet for real estate investors becomes a pariah for insurers? The consequences are immediate. Buyers are retreating from the market, as they are increasingly reluctant to purchase condos that may not be insurable. Developers, who had once viewed Vancouver as a prime location for new projects, are now halting construction plans as the rising insurance costs make new projects unfeasible. Layoffs in the construction and real estate sectors are mounting, as companies struggle to stay afloat amidst the skyrocketing costs. Banks, too, are tightening their grip on mortgage lending, pulling back from loans for properties in Vancouver that they view as too high risk. Without insurance, these properties are effectively unfinanceable. Home buyers who may have once been able to secure a mortgage for a condo in Vancouver are now finding that they can't even get the financing they need because banks are unwilling to lend on properties without adequate insurance coverage. It's a vicious cycle that feeds itself, and the longer it continues, the worse it will get for Vancouver's real estate market. The human cost of this crisis is staggering. Condo owners, who have worked hard for years to afford a property in Vancouver's expensive market, are now finding themselves caught in a financial nightmare. Many are facing the possibility of having to sell their properties, often at a loss, simply to escape the crushing weight of their insurance premiums. Others are finding that their properties are simply unmarketable, with no buyers willing to purchase uninsurable properties and no way to secure financing. These condo owners are effectively stuck with their investments, unable to sell, unable to refinance, and unable to insure their properties against future risks. But the pain doesn't end there. Developers, once confident that Vancouver's housing boom would continue indefinitely, are now staring at empty construction sites, unable to complete their projects because they can't secure the insurance they need. The result is a city littered with unfinished buildings and abandoned developments, as developers are left scrambling to figure out how to deal with a market that has turned against them. This crisis, however, is not just an isolated event in Vancouver. The ripple effects of skyrocketing insurance premiums and uninsurable properties are likely to spread to other parts of British Columbia as developers and homeowners across the province are impacted by the same rising insurance costs. The real estate market in the entire region could be at risk of unraveling, as more and more properties become uninsurable and the value of real estate continues to decline. What's even more worrying is that this crisis could just be the beginning. If the current trends continue, Vancouver could be facing an even greater housing shortage in the near future. As developers pull out of the market and new construction projects grind to a halt, the supply of housing will shrink. This could lead to even higher prices for the properties that remain, making it even more difficult for the average person to afford a home in the city. The lack of affordable housing, already a serious issue in Vancouver, could become an even more pressing problem if this crisis continues to spiral out of control. And it's not just homeowners and developers who will feel the pain. The entire city of Vancouver could be on the verge of a full-scale financial collapse. With property values declining, jobs being lost, and investments tanking, the ripple effect will be felt in every corner of the economy. From retail to hospitality, from small businesses to large corporations, Vancouver could soon be facing the kind of economic downturn that hasn't been seen in decades. As the government scrambles to address this crisis, it's clear that they are struggling to find a solution. Politicians have offered vague promises of intervention, but so far, no concrete plan has emerged to stabilize the insurance market or protect condo owners from the skyrocketing premiums. Without decisive action, Vancouver could be heading towards a market collapse of epic proportions. In the coming months, we could see even more drastic measures taken by insurance companies and governments alike as the crisis continues to unfold. The future of Vancouver's housing market is now in serious jeopardy, and unless something is done to address the rising insurance rates and uninsurable properties, the city could face an economic collapse unlike anything it has ever seen before. What does this mean for the average condo owner? It means that the time to act is now. You can't afford to wait for the situation to get better on its own because, frankly, it might never improve unless drastic measures are taken. The crisis is only going to get worse, and the only question left is how much longer it will take for the market to collapse under the weight of its own instability. As the dust settles and the full extent of the crisis becomes clear, one thing is certain: Vancouver's real estate market is never going to be the same again. The future is uncertain, and the road ahead is fraught with danger. But for those who act now, there may still be a way to survive this storm. The clock is ticking, and the only question left is, who will be left standing when the dust settles? As the crisis continues to unfold, one question keeps circulating through the minds of Vancouver residents, property owners, and investors alike. How did we get here, and how much worse will it get before things start to improve? It's not just about skyrocketing insurance rates anymore. The issues run much deeper, and the financial implications stretch far beyond the real estate sector itself. Vancouver's entire economy is now in peril, and as the situation escalates, the public is demanding answers. But as of now, the government's response remains insufficient at best, leaving homeowners, developers, and real estate professionals in a state of uncertainty. This is no longer just an insurance crisis. What we are witnessing is the unraveling of Vancouver's housing market, and the impacts are already being felt by many. The unthinkable has already happened. Condos in Vancouver are becoming uninsurable, and with that, the city's real estate market is on the brink of complete collapse. From soaring insurance premiums to the resulting exodus of buyers and developers, the ramifications are being felt across every sector tied to real estate. From construction companies to insurance providers to the very banks that fuel the housing market, no one is immune. The immediate fallout from the uninsurability of Vancouver's condos has been devastating. Condo owners, many of whom had placed their life savings into these properties, now face a crushing dilemma. With their homes uninsurable, the value of these condos has plummeted. The initial loss is significant, but the long-term consequences are even worse. Without insurance, these properties are effectively valueless in the eyes of buyers and investors. And for the average homeowner, the situation is even more dire. With their properties rendered uninsurable, the possibility of foreclosure looms large. The combination of rising insurance premiums, skyrocketing interest rates, and the declining value of their homes means that many condo owners are left facing a financial nightmare that they cannot escape. For developers, the situation is just as bleak. Construction projects that were once seen as promising investments are now stalled or abandoned altogether. The cost of securing insurance for these projects has risen to unsustainable levels, and with the risk of being unable to complete them, many developers are pulling out. Vancouver, once a bustling hub of new development, is now filled with half-finished buildings, abandoned lots, and empty developments. It's a sad sight that tells the story of a city on the edge of financial collapse. Banks, too, are beginning to tighten their grip on lending. No longer willing to take on the risk of insuring properties in Vancouver, many lenders are refusing to approve mortgages for condos that cannot be properly insured. This is creating a ripple effect in the market, as potential buyers are unable to secure the financing they need to purchase homes. This, in turn, is further exacerbating the downturn in property values, as fewer buyers are able to afford even the smallest condos. The result is a market where the value of real estate continues to drop, and those who own property in the city are seeing their investments dwindle away. But the pain does not stop at the condo owners and developers. The real estate sector in Vancouver, once a key driver of the economy, is now in turmoil. As layoffs sweep through the industry, workers in construction, sales, and real estate management are finding themselves out of jobs. The jobs that are left are increasingly low-paying, as companies cut back on staff to stay afloat amidst the chaos. These layoffs are creating a ripple effect throughout the city, as more and more people struggle to find work, and those who are employed face rising costs of living and job insecurity. As the crisis deepens, the pressure on the government to intervene grows. But while politicians have offered platitudes about finding solutions to the crisis, the reality is that they are failing to act fast enough. The real estate crisis is a complex problem, one that requires a multifaceted response. Yet, to date, the government's response has been insufficient. There has been no clear strategy put forth to stabilize the insurance market or protect condo owners from rising premiums. The lack of clear action has left many questioning the government's ability to solve this problem, and as the crisis worsens, the public's faith in political leadership continues to erode. In the face of this crisis, many are beginning to wonder if there's any hope for Vancouver's real estate market. Can it recover from the damage that has already been done? Or is this the beginning of a much larger collapse that will affect the entire province? While it's impossible to say for certain, the signs are clear. The future of Vancouver's real estate market is uncertain, and unless drastic action is taken soon, things are likely to get much worse before they get better. The question now is, what can you do if you're a Vancouver condo owner, investor, or developer? The situation is dire, but there are steps you can take to protect yourself. For condo owners, it's crucial to stay informed and understand your rights. Keep an eye on the latest insurance trends and look for ways to reduce your risk. If you're looking to buy property in Vancouver, it's important to be aware of the risks involved and be prepared for higher insurance costs. The market is changing rapidly, and those who act quickly may be able to weather the storm better than those who wait too long. For developers, it's essential to reassess the viability of your projects and consider alternative financing options. Many developers are finding it difficult to secure the funding they need to complete their projects, but there are still opportunities available for those who are willing to adapt. It's crucial to stay agile and be ready to pivot if the market continues to deteriorate. And for the government, the time for action is now. The crisis in Vancouver's real estate market will not solve itself. Immediate intervention is necessary to stabilize the insurance market and protect condo owners, developers, and buyers from the escalating costs that are driving the city's real estate market to the brink. Without strong leadership and decisive action, the crisis will only deepen, and Vancouver's real estate market could face an economic collapse that will be felt for years to come. This is a critical moment in Vancouver's history, and the choices we make now will determine the city's future. The clock is ticking, and the window for action is closing fast. If you're a Vancouver condo owner, developer, or investor, it's time to take control of your future and prepare for what's coming. The crisis is real, and it's unfolding right before our eyes. As this situation continues to evolve, make sure you stay informed. Don't let yourself be caught off guard by the next wave of changes. The future of Vancouver's housing market is uncertain, but by taking the right steps now, you can position yourself to survive and even thrive in the face of this unprecedented crisis. If you want to stay up to date on the latest developments in Vancouver's real estate market and get actionable advice on how to protect your investments, make sure to subscribe to our channel and comment 1 below. Don't miss out on the next critical update because the worst may still be ahead. Stay tuned and take control of your future before it's too late.